Hey everybody, welcome back to the channel. Today I'm going to go over the ICT Silver Bullet Hour for the AM session on Thursday, July 27th. Okay, so when we come to the charts here, we know that the buy-side liquidity has been taken on a daily candle. So this is the high line. This is what was just taken right here at 8:30. They took out the high on the daily candle. That's what this line is right here. So now we're looking for what's price going to do. It's just kind of hovering in this range. We're looking for price to do something, right? Ideally, when it comes into this daily is a high time frame PD array. You know, that's an old high right here. This line is a daily old high. We're looking for a reversal at this point, right? We like to go down short. Usually when price goes to external liquidity, then it comes into internal liquidity and then back to external liquidity. So external liquidity has been taken. Now we're looking for internal liquidity, right? So we're looking for a reversal of some sort, at least a pullback to some structure, and then we could possibly go higher, okay? So right now, that's what was just taken out. So now let's look and see candle by candle, and I will be buying and selling based on TradingView here on candle closures, so I may not get the best fill or exits, but we'll just play it by ear, see what we got going on, okay? So right now, what I see, okay, is we have this low here, we have a low here, and we have, gosh, you have a mitigation block right there. So you have a mitigation block right here. High, low, lower high, failed to take out this high, so that's there. When it trades through it, and then comes back up into it, which is this candle right here, trades, well, technically this one trades into it, but this one closes into it. That makes this a mitigation block. Okay? So you can go short. Alright, so for me, because I'm looking to go short, I'm looking at what are my draws on liquidity, right? So I have a 5-minute draw on liquidity here. So you see 5 minute. Another 5-minute fair value gap there, a 5-minute fair value gap here. And then you have this over here. I'm going to show you this. I'm going to slide this over here. This would be a 5-minute fair value gap over here on the 5-minute. This is on the 5-minute fair value gap right here. And then this, if you go into the video I posted yesterday, I believe, the London Silver Bullet. This is where that volume imbalance is right there. And then you have from this candle, I'm sorry, oh, not this candle. Well, this candle to this candle right here is right there, a fair value gap, okay? And then from this candle to this candle, you have a fair value gap with a liquidity void. So when I just put all this on, that's the total range of all of those 3 PD arrays right there is this green box, okay? So when you come back over, that's what that is. You see that right there, okay? So we have plenty of range. If we got into this trade, we have plenty of range from here. That's 10 is to that one, 13, 15, 17, 18. So we got plenty of range to go down, right? Did just take out a daily, a high here was taken out, so we're looking for going shorts. And we have a mitigation block. Now we're seeing how it's being respected here. So you could have taken your sell right here if you wanted to immediately. Okay, me personally, I like to see a few candles, see how it's respecting more, but consequent encroachment is not being breached. So that is, you can still take a trade right there. So let's sell to right here. Obviously I'm taking it right here because of the fill on TradingView. And where am I targeting? I'm targeting this draw on liquidity right here. Okay. I take my partials here. Where's my partials being taken at? This low. Okay. So I want to show you, I'm trying to show you everything that I've got on the chart here. Alright, so now let's just see how we go. I'm going to take a partial, so this partial's taken there on a close, so I'm going to reduce my, that would have been a better fill on TradingView, personally, but okay, so there is consequent encroachment. So it's very important to see what happens here. Okay, you see how it started higher? That means that there's a bullish volume imbalance, but then it gets filled in. which cancels it. Okay, so I don't really, I'm still tracking that, but because it closed so much aggressively, I'm fine with that. Okay. All right, so let's keep going here. Again, this is 12 handles, right? So if I was only aiming for 5, it's right here. Okay, so our first partial is 8.5 handles. So kind of a bigger trade. Do you have to have that? No, I'm just shooting for targets. You know, instead of just giving you 5 handles and showing you how you could have managed your trade differently. We'll see how that's being respected. Okay, so at this point right here, partials, this is probably 70%. This is based on structure. 60% is right here. If you already did your 5 handles, you were out already. You were out right there. So 5 handles, probably should have moved stop to break even, but right now this is what we chose. We're not deviating at the moment. If it comes back up here, we probably will be reducing our risks because we could have gotten out. We maybe have been greedy. Who knows? So we're just seeing what happens here. Price action. Okay, because you've got some structure here. You've got a fair value gap right here. Okay, you've got another fair value gap right here. I don't know if I can actually move that one here. You got that one right there. So let's see how these are being respected by the bodies, which is good, but let's see what happens here. Okay, I don't care about wicks. Wicks don't scare me. That's consequent encroachment of that. Okay, we're still fine. Notice how the bodies, I'm going to extend this. Notice how the bodies are in consequent encroachment. The wick, you know, taps the top. These ones go through it, but the closing below. So it's still being respected, that fair value gap. So I'm fine with that right now. I'm just watching how price reacts. Closes in. Okay, I don't like that. I don't like this bullish volume imbalance right here, but it does close. It goes above and closes there. So the very next candle, I'd like to see it open here or lower and then come down. Okay, that's fine. Respecting that fair value gap. See, it doesn't want to go above that. Consequent encroachment is fine. Wicks do the damage. Bodies tell the story. The story is it doesn't want to go past that fair value gap, so I'm fine with that. Close. Okay, I'm gonna take a partial there because it's really close to our target and it would have taken us out there anyway. So I'm trying to be as close to accurate as we can here. And now my stop, I'm going to throw this on here. I'll throw my stop on here. Trailing stop. My trailing stop is, that's where we got in, so my trailing stop would be probably this midnight line here. Usually you're 2 ticks in profit. So this would be the 8:30 line right here. And I have one more. Okay, close. All right, I'm not gonna go out there. I'm waiting for a close. It's closer to that. Right there should be close. Okay, right there. Flatten. I'm out right there. We'll put there. Okay. All right, where'd it go? It went to this 5-minute fair value gap. Took out this 5-minute swing low. So that was taken out. Okay, went there. Okay, so wicking into the 5-minute fair value gap right now. We've already had a good trade. Okay, so you've got some imbalances here. that out there. You have a fair value gap there. We have a fair value gap here. Okay, so if we pull the fib from here, it's high to low here. Here's right in optimal trade entry. So what I'm doing is I'm watching this right now. Okay, if it just blows right through it, I'm not looking for shorts. I'm just going to see how these react as inversion fair value gaps. See how they're respecting. I'm also seeing optimal trade entry. So I'm just watching price action at the moment. I know that when you come down, we're always looking for a pullback. This could just be a pullback for lower structure. Okay, this is to remember, this is that combination of multiple PD arrays. Is this green line? This is a 5-minute fair value gap, a 5-minute fair value gap. So let's just see what happens here. Okay. In there, it's respecting it. Bodies are respecting it. Let's see what happens here. Again, now my rule is there's 2 PD arrays, I want to enter on the top, the higher one, if possible, which is also in optimal trade entry area, so that's really good. I just want to see how price reacts. That's what we're doing. All right, so now we're above that lower fair value gap. Okay. All right, so let's see what happens here. So we still have this fair value gap right here, which is what that hit and then stopped there. So we'll see in the next candle if it closes below this or in this one, I'll take a short. It's kind of freezing it right in here. Let's see what happens. Next one's good. Okay. All right, then I'm going to sell 2 there. Why am I selling 2 there? Well, it came up. One candle closed above the 79% line, and the other one closed the same way as well, doji style. But it came up, hit the bottom of this fair value gap right here. So it respected that one, it violated this one. It's in optimal trade entry area, and then in this candle closed below, it's telling me it doesn't want to go higher, so I'm getting into the candle. That's what I'm getting in for, right? Why I got in this trade, okay? That's my thought process. That's what is going on here, okay? So reduce this to 1, because see where I'm going to take a partial at. 60%, I'd say. Well, where am I aiming for? Get in there. This is 1 to 6 there. We're actually aiming for this low right here, minimum. So let's just go to 3. There you go. Where's my stop? Is above this high, because this is the fair value gap. It's right here, right next to this high, 1 tick above. That's where my stop's at. All right, our trailing stop is done, so I'm just putting that off to the side here. If I take a partial down here, it'd probably be on this fair value gap right here, right in here, because I know that can give us some resistance right there. So make a roadblock. So if it goes in there, I'm taking a partial and moving my stop up. And if it takes me out, it takes me out. Close below it. Close. All right, perfect. I can buy one there. Now my trailing stop is, let's see, where do we get in on this? Right here. So it's right here. It would have been up here by the rules, but because of TradingView, it's like right there. One more right below there. Perfect. All right, flat. All right. All right. Just want to show you where it actually went to. So it actually went to that cluster, to the tick of that cluster of PD arrays that I showed you earlier, which was way over here. It was during the London session, where you had from this candle to this candle, a fair value gap, from this candle to this candle, a fair value gap, from this candle to this candle, liquidity voids. You got 3 PD arrays. That's what this green is. It's all 3 of them. And price came down there to the tick to fill it in, right? Before it started going higher, okay? All right, there's your 2 setups for the AM session. We had a mitigation block over here because a daily PD array was hit. The daily high was taken out, so we're looking for a reversal. We're taking price is respecting this mitigation block, so we're taking a trade. I would have liked to be entered in here because it just crossed over consequent encroachment, but you can see all these are being respected, so you can get in anywhere. We got in the first trade. We came down and we took a partial here. We'll have to close below this. That's granted, this was a bigger trade, much more than 5 handles, and we took it down to this lower sell side liquidity, and then the 5-minute fair value gap. That's where we got out. Okay. Then price came in, we pulled our fib from the high to the low to see if it's just a pullback, right? That's how you're going to have to gauge if it's a pullback. How do you know if it's a pullback? I don't know how you know it's a pullback. I look at the fib, and if it's respecting the optimal trade entry, you know, and there's a PD arrays that match and everything, then I'm going to take that chance and risk it. So here it was respecting these fair value gaps. It went up to the top one, still respecting the optimal trade entry. This candle was a little higher. It did respect that fair value gap. So when this candle traded lower, we took our trade, and then we moved our stop when we took our first partial down here when it came into this fair value gap, because we know that this fair value gap could create a roadblock for price. So we took our partial and we moved our stop to break even, plus 1 or 2 ticks, and then we had kept aiming for our target, and we ended up hitting our target. Price eventually went down to this cluster on the 1 minute to the tick, which was great before it went higher, and now it's kind of bouncing around. So that's your 2 silver bullet session trade setups for the AM session.